The Precious Metals Week in Review, November 27, 2015. Brought to you by Precious Metals International. It was a shortened trading week due to the Thanksgiving holiday in the U.S. Markets were closed on Thursday and saw a shortened trading day in the U.S. on Friday. As we move into December next week, we expect speculation over an interest rate hike by the U.S. Federal Reserve to continue to be the main factor affecting all markets. The number of Americans filing new claims for unemployment benefits fell more than expected last week, dropping by 12,000 claims to a new level of 260,000. The previous week's data was revised to show 1,000 additional claims. Seasonal hiring for the holiday season, in addition to the approach of the Thanksgiving holiday in the U.S., may have worked together to keep claims low last week. The 4-week moving average of initial claims, which most economists consider to be a better gauge of the true state of the U.S. labor market, remained unchanged at 271,000. Continuing claims, those individuals still receiving unemployment assistance after an initial week of aid, rose by 15,250 to a new level of 2.18 million. As we enter the traditional holiday shopping season, the U.S. consumer appears to be showing signs of holding back on spending this year. According to the U.S. Commerce Department, consumer spending rose just 0.1% in October, despite a 0.4% increase in incomes. September's data was similarly weak, and consumers appear to be choosing to boost their savings instead of pouring their cash into the economy. Savings rates among U.S. consumers are at their highest level in 3 years, and since consumer spending is such a large part of the U.S. economy, the increase in savings may indicate that the fourth quarter could post a weak showing. Initial reports on Black Friday shopping patterns appear to show weaker crowds than in years past, but the decrease may be due to an upsurge in online shopping, which continues to put a dent in traditional brick-and-mortar store sales. The fighting in Syria took an unexpected turn this week when Turkey downed a Russian jet, killing one of its crew. Turkey claims that the Russian plane entered its airspace despite repeated warnings to turn back, while Russia says the craft received no warning at all prior to being shot out of the air. Russia canceled visa-free travel into Turkey for its citizens and tightened controls on Turkish food imports in response to the incident. Turkey's president has apparently requested a meeting with Russian President Vladimir Putin on Monday in Paris on the sidelines of a United Nations climate conference, ostensibly to discuss the event, but there has been no official word out of Moscow yet on whether Mr. Putin will accept the meeting request. In China, stocks posted their worst weekly performance since August after the China Securities Regulatory Commission announced it was conducting an investigation into security brokerage firms over short-selling practices and speculation. Major indices fell more than 5% on Friday and brought the rally that Chinese stocks have been experiencing since hitting their lows in August to a screeching halt. One of China's largest brokerages announced on Monday that it had been unable to reach its chairman since last week, which is likely not a coincidence. In August, there were several similarly high-profile disappearances of executives amid a slew of investigations into the Chinese stocks plunge. Such missing executives usually turned up a short time later, with apparent cover stories that they had simply been off on retreat. Elsewhere in Asia, Japan's core consumer prices fell for a third consecutive month in October, and the price drop was accompanied by a surprising fall of 2.4% in household spending. The Core Consumer Price Index, CPI, excludes volatile costs such as fresh food, but does include energy costs such as oil. The continued decline in oil prices has driven energy prices as a whole lower across the world, and that drop in energy prices is putting downward pressure on inflation as a result. Japan officially slipped back into recession during the third quarter, which calls into question the Bank of Japan's continued assertion that it expects to hit its 2% inflation target in early 2017. The European Central Bank, ECB, said on Wednesday in its Financial Stability Review report that the slowing of growth in China since the beginning of 2015 has reduced euro area exports, in particular exports of machinery and transport equipment. This has had adverse repercussions, in particular for exporters of manufactured goods, which account for almost 90% of goods exports to China. The ECB worries over a spillover effect of ongoing economic weakness in China, concluding in Wednesday's report that the impact on the euro area of a potential further slowdown in China ultimately hinges on the extent to which this slowdown spills over to other emerging markets more generally and the degree to which the resulting loss of confidence affects global financial markets as well as global trade. Crude oil prices remain suppressed this week. The ongoing global supply glut and continued economic weakness in China are acting to keep prices depressed, despite the ongoing geopolitical unrest in the Middle East. Crude continued to hover around the $40 a barrel range through Friday. The euro started the week dropping against the US dollar, but quickly regained ground and had gone positive for the week by Wednesday. Wednesday saw a steep drop for the euro, which it could not recover from as the week finished. The euro will close the week lower against the US dollar. The Japanese yen also dropped against the US dollar at the start of the week, but quickly began climbing higher. The yen also saw a sharp drop against the US dollar on Wednesday, but managed to recover some ground and appears set to close the week higher against the US dollar. Next week, as we enter December, there is likely to be a flood of economic data and a surge in speculation over the actions of the U.S. Federal Reserve as it approaches its final Federal Open Market Committee, FOMC, monetary policy setting meeting of 2015. The Fed is widely expected to initiate its first interest rate hike in nearly a decade at the conclusion of the FOMC meeting in mid-December. There will be a slew of data points next week to pay attention to. On Monday, the International Monetary Fund is expected to give the Chinese yuan status as a reserve currency and include it in the fund's special drawing rights basket of currencies. U.S. Federal Reserve Chair Janet Yellen is scheduled to speak twice next week and is expected to continue to lend support to expectations for a rate hike in December. On Thursday, the European Central Bank, ECB, will hold its monetary policy meeting and is projected to announce an expansion of its quantitative easing QE program. The Organization of the Petroleum Exporting Countries, OPEC, will meet in Vienna on Friday, but is widely expected to make no changes in production levels despite growing unrest among some of its member countries that have been hardest hit by the slump in oil prices. Friday will also see the release of the non-farm payrolls report in the U.S. for November, the last such report for 2015. Despite the upcoming ECB meeting where an expansion of QE is expected, the bank announced on Wednesday that it would temporarily halt its QE program between December 22nd and January 3rd, in anticipation of lower market liquidity during this period and in order to reduce possible market distortions. The ECB will resume its bond purchases on January 4th. In Europe, the repercussions from the Paris terrorist attacks continued this week. In Brussels, Belgium, Prime Minister Charles Michel announced on Monday that the heightened security alert level would be maintained through next week. Brussels went through a 4-day shutdown of its schools and public transportation system over the past week as officials warned of the possibility of a terrorist attack similar to those that took place in Paris. Brussels has become a heated point of debate since the Paris attacks. Some areas of Brussels have apparently become hotbeds of extremism over recent years, just a short distance from the very spot where the European Commission meets to determine the course of the European Union. Even the U.S. State Department expressed heightened concern over what seems to be growing extremist threats, issuing a global travel alert this week for U.S. citizens due to an increase in terrorist threats. The travel notice goes through February 24th next year and warns U.S. citizens to exercise vigilance when in public places or using transportation. Be aware of immediate surroundings and avoid large crowds or crowded places. As we close out the month of November and move into the final month of 2015, global geopolitical and macroeconomic uncertainty continue to escalate. In such uncertain times, it remains imperative to maintain a well-diversified investment portfolio, which includes physical precious metals as one of its components. Wise investors continue to seek out buying opportunities that allow them to add more precious metals to their well-diversified portfolios at a discounted price. Precious metals mining companies continue to struggle to produce their products at current prices. Randgold Resources Limited is just the latest to publicly voice its view that precious metals mining production simply cannot continue at current price levels. Rand CEO Mark Bristow, in an article posted on Bloomberg this week, speculated that half of the gold coming out of today's mines may not be viable at current prices. Mr. Bristow said, "The more we continue to produce unprofitable gold, the more pressure we put on the gold price. In the medium term, it's a very bullish outlook for the gold industry. The question is, how long are we going to supply with unprofitable gold?" It seems clear that mining companies have begun to run out of options with regards to cost-saving and cost-cutting measures that will allow their companies to stay afloat until prices recover to profitable levels for them. Now that even the largest of the mining companies are being forced to publicly admit that they have no choice but to sell their products at a loss, perhaps the mainstream media will finally realize that for these mining companies to survive at all, prices must move higher in the very near future. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products, and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, November 27, 2015. Brought to you by Precious Metals International.